This is the weekly chart for the dollar Swiss. If you remember from a couple of weeks ago, we identified the next structural point as the 117.40. We did come, once you see a blue line like this, you know that this is a structural point that we have identified. We just came exactly towards the 117.40 and we just sold off a little bit, which was as a reaction as soon as the news came out on Friday, and then we turned around. One second, guys. One second. So as we can see, we came pretty much close to the 117.40 and we sold off slightly. And that sell-off, of course, was as a result of the unemployment that came out. And this is what I want you to see. Look at this. Somebody was asking about the discounting the news, discounting mechanism. This is exactly, David, what it is. That is a discounting mechanism. The news came out, there was this sell-off, and this is turned out. So the news as it is, this is quite bullish, if you will, David, for the dollar, especially versus the Swiss franc. We had quite a big range day. Our close for the day is a good close. It is not a, it is a close that would indicate continuation, would indicate that the market will continue to go higher. So we definitely want to be buyers of the dollar and sellers of the Swiss franc. So we are going now to identify this is just the intraday chart for the dollar Swiss is a little bit noisy. We need to find, I cannot find on it a structure point to enter a long. So what we're going to do, because as you see that this has been quite a choppy kind of a move towards the end of the day, we do want to go long, but in this case we are going to go long above the high of the day. The high of the day is 42, the close was 25, so that is a decent buy. Again, because the structure of the chart over here is rather weak, we don't have a well-defined move or a pullback that lays the structure of the chart. So in this case we will take the highest point just to ensure that we're getting the continuation. So that is going to be our long point. Our short point is $116.10. This short point, as you can see, we have one short point is the 116.10. See that? But based on the behavior, it broke the 116.10 once, it broke it twice, it held, and it held. So this means if it breaks below the 116.10, we do not expect to see continuation to the downside. So we're not going to use the 116.10. The market, the price behavior is telling us that the 116.10 is not a strong shorting point. So even if we take a short below the 116.10, it's not going to pay us, because based on its previous behavior, it hasn't paid. So in this case, we are going to take a short below the 115.27, because at least below that point we had a major sell-off. So the 115.27, that is going to be our selling point, our short point. 115, which we had it pretty close from last week, 115.38, so it's not really much different. Just 115. This is our selling point, which is right there. This is that will be our selling point over here. And if we short it below 115.27, we're going to place our stop right above here. So our stop is going to be above 115.73. So in this case, we're risking about 50 pips on the short trade. And if we're going to go long, we're going to place our stop below the 115.84. Alright, so our long stop is going to be 115.84. Our short stop we took is 115.27. Our structure long is the 117.14 from last week. Our structure short is the same from last week, 114.86. Our long stop, if we're going to go long at what's our long stop? I'm going to place my stop below 115.75. Okay. Alright, that is the dollar Swiss. Our long point is the 116.42, and if we buy it right there, we're going to place our stop below 115.75. Our short stop is 115.27, and in this case we're going to place our stop above 115.85. Our structure long is 117.14, and our structure short is 114.86. Okay.